Hey guys, what's up? My name is Ayush Khanna and you are watching our channel Ayush Khanna classes. I'm going to start with the RTPs of accounts group 1 of CA intermediate new course have been completed. The RTP. Okay, you can watch those videos. And second thing, I'm going to cover all the amendments in advanced accounts paper. Okay, and thirdly, in approximately 4 to 5 lectures, I'll be completing the RTP. Okay, now let's start. First point, the RTP. RTP's amendments. The amendments in advanced accounting is very less. The very less number of amendments. Now let's start with the amendment. Yeah, you can see here maintenance of SLR and CRR. The CRR, that is cash reserve ratio, is same as before, but institute have given a total total five rate of interest, total five rates for SLR. Now, what will we take? Institute says that the 6 month that the amendments should bear to 6 months of the exams will be taken. That is till 30th April for November attempt. Till 30th April, 19% is the uh, SLR. Okay, for May 20, the uh, rate of SLR shall be 18.5%. Okay, for May, let me write for May 20, the SLR rate is 18.50%, and for November 19, the SLR rate is 19%. Okay, and the CR rate is 4% for November 19. Okay, now let's start with RTP. First question. Yeah. It is of ESOP, that is employee stock option plans. The firm would at April 1, 2016, number of employees covered to 50, and number of options granted per employee is 1000, and fair value of option per share on granted is Rs 9. Okay, the option will vest to employees serving continuously for 3 years from the vesting date. That means the vesting period is 3 years out of the vesting date. Okay, provided that the share is P65 or above at the end of 2018-19. Okay. Uh, the company has estimated that the number of employees satisfying the condition continuously employment were 48 for the year 2016-17, 47 for 17-18, and the number of employees actually satisfying the condition uh, of continuous employment is 45. That is for the last year of 18-19 is 45. The share price at the end of 2018-19 is 68. Now see, both the conditions are satisfied. Okay, so we have to compute expenses to be recognized in each year. Okay, now let's start. Question number one. If we talk about first year, expenses shall be, see, 48 into 1000, 1000 into rupees 9 per share. Okay, divided by 3 years, three number of years, and this was the first year. Okay, uh, just a second. The amount here is 48,000 into 9. That comes out to be. I'll just calculate it. 48,000 into 9 divided by 3. 1 lakh 44,000 for the first year. For the second year, expenses shall be now. But for the second year, just see, have a look at RTP. 47 employees. Okay, so we'll take 47 into 1000 employees, into 1000 stock options into rupees 9 divided by 3 into 2 minus 1 lakh 44,000. Okay, now as you know that it is the second year includes the expenditure of first year. Okay, so we'll subtract it in order to compute the expenses of second year only. Okay, if we calculate it, that comes out to be 1,38,000. Okay, 1,38,000. I hope you got it till here. And for the last year, that is the third year, it will be 45,000. How? 45 into 1,000 into rupees 9 divided by 3 into 3 for third year and minus 1,38,000 and minus 1,44,000 expenditures of previous 2 years. It comes up to be 45 into 1,000 into 9 divided by 3 into 3 minus 1,38,000 minus 1,44,000. It comes out to be 1,23,000. We talk about total expenditure for the 3 years. Total expenses. It will be 1,23,000 plus 1,44,000 of the first year and 1,38,000. Into 3 plus 144, 138. It comes out to be total of 4,05,000 rupees. Total for 3 years. Okay, I hope you got it. Now next question. Second question is of buyback. It says Umesh Abdat resolves to buy back 4 lakhs of its fully paid up equity shares of his 10 each at rupees 22 per share. That is, the face value is rupees 10 and the buyback is rupees 22. Then the premium amount will be rupees 12. That is 22 minus 10, rupees 12 per share. Okay, the buyback is in compliance with the provisions of the Companies Act and does not exceed 25% of the company's paid up share capital in the financial year. Okay, for the purpose, it issues 1 lakh, 1 lakh 11,000 preference shares of rupees 10 each at par, the entire amount being payable with applications. Okay, the company uses 16 lakhs of its balance in securities premium account apart from the adequate balance in the general reserve to fulfill the legal requirements regarding buyback. Give general entries. Okay, I think it's easy. First, we're gonna issue the preferential capital. Then we'll make the amount due of equity share capital. Now, what will be the uh, entry of due amount? Let's see. Yeah, the entry of due amount shall be equity share capital account debited, premium on buyback, okay, to equity shareholders, being amount made due. Now, this is 4 lakhs into rupees 10. Maybe it's a different color. Just a second. 4 lakh into sorry, rupees 10. That is 40 lakhs here. Here would be 4 lakhs into rupees 12. If I'm not wrong, it shall be 48 lakhs, and 4 lakhs into rupees 22. That is 8 lakhs. 88 lakhs, sorry. Okay, then we'll pay the amount, and the amount of then capital redemption reserve shall be rupees 30 lakhs. Now, how 30 lakhs? Face value of this 40 lakhs, and 10 lakhs is for the preference share capital, the face value of preference share capital. That is rupees 10 lakhs. It will be 30 lakhs will be however what capital redemption ratio. Sorry, capital redemption reserve CRR. Next question. The question is completed. There were no much points. Question number three, A part. What is meant by equity shares? Equity shares with differential rights. Can preference shares be also be issued with the differential rights? For this, it is a theory question. You can, I think, learn by yourself or just read it because it will come only for 4 or 5 marks. Okay. Now, third question, B part. Uh, this question at mostly times, mostly teachers, I should say, mostly teachers do not provide in their material, in their book, and by consequently, in November 18 attempt, in November 18 attempt, the this question was asked for 5 marks. Question number three, B part, and the same question was asked in November 18 mock test paper, and the same question is in a new course RTPs in all. I think this is the fourth attempt I'm seeing the I'm seeing this question fourth time in new course in RTP. Okay, so you're required not to skip even 5 marks can make you pass. Can make you pass. Okay, now let's start. Uh, it's a very easy question. You don't to I don't need to explain it much. And let's see. Alumni equity hold equity capital in the proportion of 30, 30, 20, 20. If you total this, it is 100. Okay. In AB Limited, X and Y, X, Y, Z, and K hold preference shares. Alumni are equity shareholders. X, Y, Z, and K are preference shareholders. In the proportion of 60, 30, 20, 10. Okay. You are required to identify the voting rights of the shareholders in the case of resolution of winding up of the company if the paid up uh, capital of the company is 80 lakhs and the preference share is 40 lakhs. The paid up capital is equity share capital, okay, and its rupees 80 lakhs. Now, what we have to do in this question, for the purpose of uh, identifying the voting rights, we'll take both the capitals, both the equity shares in their ratio 40 lakhs, sorry, 80 lakhs into 40 lakhs. Firstly, the equity share capital will be winded up, then preference share capital. Okay, the this company act says, not me. The ratio is if you calculate 2 is to 1. Now, LMNO, we talk about their share in voting rights 2 by 3. 2 is the equity share capital and 1 is the preference share capital. 2 by 3 into 30, 30, 20, 20. 30 by 100, 2 by 3 into 30 by 100, 2 by 20, sorry, 2 by 3 into 20 by 100, and same like this, 2 by 3 into 20 by 100. Then for x, y, z, and k, it shall be 1 by 3 into 40, 30, 20, 10. 40 by 100, 1 by 3 into 30 by 100, uh, 1 by 3 into 20 by 100. You have to calculate these. Okay, 1 by 3 into 10 by 100. Now you have to calculate in ratio only. Okay, easy question for 5 marks, but important. This is Institute's favorite question of underwriting of shares. Okay, the company has made a public issue of 2 lakh equity shares of which 10 each at a premium of rupees 2 per share. The entire issue was underwritten by preference shares by underwriters sell them and no in the ratio 4:3:1 respectively with the provision of the firm underwriting 5,000, 4,000, 2,000, and 2,000 respectively. Okay, the company received application for 1,50,000 shares including firm underwriting from public. Out of the applications for 55,000, 40,000, 42,000, and 8,000 shares were marked in favor of LM and NO respectively. Uh, they have asked us to calculate the liability of each underwriter as regards to the number of shares to be taken up, assuming that the benefit of underwriting is not given to the individual underwriter. Okay, now shall we start with the question? Okay, let's start. It's not given. Okay, see, just a second. And let's start with question number 4. Statement showing computation of liability of total liability of underwriters. Okay. Now let's see. Start. Particulars. L M N O and total. First, what is the gross liability? 2 lakh is a total, and they have taken in 4321. That is 4 by 10 of this. It shall be 80,000, 60,000, and 20,000. No, sorry, 40,000 and 20,000. If I'm not wrong. Okay. Now let's start with further question with the provision of. Okay, we are gonna minus it. Say first we are gonna minus the firm underwriting. Okay, firm underwriting FU 542 and 2, 5 4 2 and 2. Oh, sorry, not 5 4 and 2 and 2. Sorry, it's a mistake. As firm underwriting benefit is not to be given. Okay, so total of 5 4 2 and 2 is 13,000. Okay, sorry. It will be in the ratio of gross liability, and gross liability is distributed in the ratio of 4:3 to 1. Okay, now 13,000 into 4 by 10, that is 5,200 here, 3,900 here, 2,600 and 1,300. Okay, and this is available for share, available for sale. 84,800, 60,000 minus 3,900. How much will be the amount? No, shares 56,100. 40,000 minus 2,600. 37,400, and it is 18,700. Total 1,87,000 available for shares. Available for share. Less marked application. Okay, it is 55, 40, 42, and 8. 55, 40, 42, and 8. Our total is 55, 40, 42, and 8. 1,45,000. This is excluding firm and lending because because the question says so. Okay, less unmarked application rupees 5,000 shares, and the same is in the same ratio of 4321. Okay, that is 40% of 5,000 is 2,000. 30% is 1,500, 1,000, and 500. This is our net liability. 27,800 here, 56,100 minus 40,000 minus 1,500. That comes out to be 14,600. 5,600 here, but negative. 10,200. The total here is 47,000 rupees. I think that's wrong. Let me check the calculations again. Means somewhere we are wrong in calculations. 54,800 minus 55,000 minus 2,000. 27,800 minus 40,000. 3,600, 57,400 minus 42,000, 1,000, 5,600, 700 minus 8,000 minus 10,200 minus 5,600 plus 14,600 plus 27,800. I think somewhere we are wrong in calculations. Okay, 50,000 minus 5,200. Yeah, here we are. 74,800. Then here will be 17,800. Now we are going to do negative adjustment of this person. 5,600 in the ratio of 4, 3, and 1. Okay, in the ratio of 4, 3, and 1. Okay, I hope you got it. 5,600 into 4 by 9. 2,487. From here we are going to subtract 1,867 and 6,222. Just a second. 5,600 into 4 by 9 is 2,487. Sorry, is 2,489. Okay, 2,489. 5,600 into 3 by 9 is 187. It's 1,867, and I hope it's correct. Okay, so please check the question by yourself. If another negative adjustment is there, then you have to again do, and then at last, in the last, what we have to do, we have to add back the original form under writing. Okay, in the last we have to add back the original form under writing. Yeah, I hope you got it. Yeah, please do the calculation by yourself in the last. And there are some calculation problems going with it, but anyways, solve by yourself at last. Okay, now if we move on to next information, we are gonna do it later in the next lectures. IRs two, डिविजन ऑफ कंपनीज इजी है, बाद में करा दूंगा. इंश्योरेंस कंपनी को थोड़ा टाइम चाहिए. देन बैंकिंग कंपनी, ये भी आपको अगले लेक्चर में बताऊंगा. ओके, एनबीएफसी तो आप ऐसे ही देख लो, इसमें तो कुछ नहीं है, इसमें बस सिंपल रेट्स हैं. ओके, 0.4%, 15%, सॉरी 0.4%, 10%, एंड सो. ओके, ये भी आपको अगले लेक्चर में आपको करा दूंगा. म्यूचुअल फंड्स का, this question is in study mat. In test your knowledge questions, this question is in study material, but I'll make you solve here. And valuation goodwill also is in next. So rest lectures we are in the next videos. We are gonna complete this RTP 2. Okay, thank you. Take care. Bye bye. And do like, share, subscribe my channel. Thank you.